Hey there, boo-boo. Hey, sorry I'm a little late. I went for a walk in my flip-flops with the dog, and I limped home, so I'm a little behind schedule, but all's all right. All is well. I'm just making coffee, that's all. Love. Me. 20 dwarves, 20 dwarves, 20 dwarves. In sooth, I know not why I am so sad. The wine and spine falls manly on the blinds. Yo. Sorry about that. Apparently, I don't walk enough in flip-flops. Hey, good morning. Welcome to Forex.Today, the YouTube community of 18,300 something foreign exchange traders stationed around the world. Today, we're going to cover pound, euro, CAD, yen, dollar, Bitcoin, oil, gold. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money, cannot afford to lose. Hello, my name is Wayne McDonald. I will be your guide on this journey we call Forex. Thank you for being here. Thank you for your positive energy and your contribution to the community. Many of you I've known for 15 or 20 years as foreign exchange traders. How cool is that? So I've been here from the very beginning of retail foreign exchange trading. I've learned a few things from doing good things. I've learned a few things by making mistakes, and I am here to share with you with the overriding goal that you become a success, that you become independent, that you can think on your own, do your own analysis, make your own decisions as a conservative, disciplined currency trader that's looking for repeatable trades of entering into your fundamental and long-term technical bias or biases. Cool, right? Yes. Hey, and if this education's helpful and you're getting close to being ready to trading real money and taking on real risk, well, before you get to that, you need to develop a relationship with an execution partner that can connect you to liquidity partners. And you need someone that with reasonable fees, fast execution speed, low spreads, and big swaps. But most importantly, one that has earned your respect and your loyalty and your trust. And for me, that's tradersway.com. Maybe you can visit tradersway.com today, open up a demo account, and develop that relationship yourself. Thank you, tradersway.com, for being part of our community. Okie dokie, lemon soaky. Here we are. Let's go through the world here. Aussie strong, Euro strong, pound, wah, wah, wah. That's fine. Kiwi strong, CAD strong, Swissy weak, Yen weak, USD weak. Oh my God, that's so good. That's so good. That's so good. What an amazing market. As you probably, paid attention to not long ago, the Bank of England said, not until the Fed moves. That's it. Not until the Fed. You go first, Fed. Okay. That's it. Very cool. So pound comes off, right? That means they're speaking dovishly. So that comes off for now. Great. But everything else is golden. This is exactly what we've been hoping for, wanting for, waiting for. So all is right as rain. Start with the commodities here. Take a look around. Okay, check it out. Look at this. Up, 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 up. Oh, where's my drawing tool? I don't have a drawing tool. Where's my drawing tool? Hang on. Windows. Ep. Where's my EpiPen? Oh, there she be. Okay, so let's go through this. You're going to love this, right? You're going to love this, okay? Up, 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 down, down, buy. 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 Up, 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 out. Up, 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 down, down, buy. Up, 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 down, down, buy. And we're trying to figure out, is there one more to go? Okay. We call that a role reversal. Coolio. Okay. If you recall, when we're at 50, okay, I said you need to make a decision. Are we on our way to 60 or are we on our way to 40? Once we reach 60, I said, are we on our way to 80? Or are we going to work our way back to 50 or 40? Okay. What do fundies tell you? Okay. You guys remember all of that? I also asked you way over here to do detailed research on the energy complex. I gave you very specific things to go and look for, including seasonality and long-term trends, supply and demand equations presented by 5 or 6 or 7 different industry groups. Okay. And you either did the work and you're on this, or you don't trade energy, or you didn't do the work. That's it. Cool. You're welcome, by the way. Daniel said, hey, I actually took your advice in writing a story about your future self. Yeah, it's very helpful depending on your modality, but a lot of people benefit from that greatly. Okay. So what do we have over here? Bitty, bitty, bitty. Can't you see? Sometimes the trades just hypnotize me. So Bitcoin's still just farting around doing a lot of nothing. Cool. I bought it at 30. I got a dirty 30 on this. Here's my entry. A dirty 30. And so here's what I'm hoping, right? That this is not on a 15-minute chart. Let's put this on an hourly or even 4 hour. I'll show you what I'm stinking. Okay. I'm stinking this, that this holds. Okay. So I'm here and I'm safe and it's all good. Okay. Okay. Any thoughts on that? This is actually your not a 1, 2, 3 really. But this is like a roll reversal re-entry. Okay. It's hard to do that first when you're challenging the 21. Okay. Okay. So after you breach the 21, then your kind of next target is over here. So the next one is something that you really want to pay attention to. Hua! Hoorah! Coolio, coolio, coolio. I guess we have to do gold, huh? Okay, cool. So are you a bull or a bear on gold? Well, right now, all we have is, is this sideways. Okay. And I'd like for it to start, it has to sort of start breaching some of this. I want to see a climb and then a retest. Okay. So next week's going to be important. And I would say, 1850 is going to be a big number for us. Whoa. I think we can get through 18, but 1850, that might be a challenge. So mark 18, and then the next one 1850 as challenge zones, right? So another way of doing that, of course, is like this. And let me update my toolbar. I think it's this one. You are not alone. Triangle. Insert. Cool. And I don't need two of these, right? Let's see. I guess I don't need... Yeah, get rid of that. Still too many things here, right? Where did it put it? I don't see it. I see the triangle. I don't want triangle. Didn't add it. Wait. Insert. Oh, I must have just clicked the wrong one. Huh? Okay. I don't care about that. Remove that. There we go. All right. So the way to do that is like this. Okay. You got to start marking your territory. Okay. I'm looking to see the wick here. Chow. You got to mark that. You think that's it? The psych level? Yeah, probably. Okay. And then the next one is this one that I'm looking at. Okay. So we got to start climbing. Data asks a question, what time frame is best for analyzing Bitcoin? Like my answer to every similar question, what time frame is best? They're all the best. All of them. If you don't look at all of them, then you don't know what's going on. Now, do you need to go weekly to daily to 4 hour to 1 hour to 30 to 15 to 5? No. Pick a high time frame and say, where the hell are we going? Answer that question. Okay? If you don't know technically, then you need to do fundamental research. But the first step is, what is your bias? Are we on our way here or are we on our way here? If you can't answer that, then all other time frames are irrelevant. Okay? Cool. And then you say, well, what are we doing today? What are we doing now? When should I pull the trigger? Okay? Hope says daily, then 4 hour. Yeah, but see, I look at 4 hour and see the same thing as daily. Like, right? Like, what's the difference, right? What's the difference? In my opinion, these are the same things. So I might as well just look at this, right? But yeah, you can look at daily. Okay? Sure. Okay, so a part of that, by the way, the stock market is opening in about 10 minutes. So I want to move on, but we can talk about that again later. How about that? Let's just throw that down. Let's talk about that later. Okay. Aussie. Now let's do dollar first. Okay. Euro. We'll start here. Okay. All right. So here's the basis. Like a day trade. Okay. So going back to Hope's answer there to Theta's question, day trades are great. Okay, day trades are great. And what we're looking at is, this is what happened yesterday. Okay, the gray area is yesterday's range. Okay, right there. You can use that. Think of it as the high and the low, the range. You can use that for the basis of trading. Okay. Theta says small time frame is not the best. If you don't know what's going on, it's going to seem like chaos. That's why you have to start on that top time frame. Okay. But don't even say things like, well, you can't trade this currency pair. You can't trade this time. The 5 minute is just noise. The 1 minute is just noise. Oh, don't say those things because they're irrelevant. Every time frame you look at is perfectly accurate. Okay. So if you find a certain time frame, like let's say a 5 minute chart, is too noisy, all you're saying is you need to develop more skills on that time frame. And that if you can't trade a 5 minute chart, it's going to be hard to be a day trader, but you can probably get away with it when you're a swing trader. Okay, just think of it that way. Like you need to develop skills on the 5 minute, and you don't have to do it today, but never talk yourself out of something, by these weird rules of thumb. Like I even had a coach that worked for me for many, many years. And he used to say, oh, you can't trade the Canadian dollar. I'm like, what the hell are you talking about? Are you mentally deranged? What's wrong with the Canadian dollar? Oh, it's a yo-yo. Be quiet. Be quiet. You might just simply be missing something. But how ridiculous to say you can't trade USD CAD. Right? Just admit it. You can't. Well, then get with the program so you can. That's all, right, Theta? So anyways, just try not to paint yourself in corners like that because your subconscious is listening to you. Okay? That's all, right? Yeah, check it out, KG. Check it out. Template. Currency Index ECN, Currency Index. There's two now. Yep, for sure. Metatraders.com. Okay. Right now, the new files are only on the auto installers, not the individual downloads. But right? Cool. Theta says, yeah, that's true. Yeah, just asked about Bitcoin. Yeah, but it's always right. The thing is that it's like, I can't think of a good example, but like, which finger do you use the least? Well, it doesn't mean you cut it off, right? So I don't know if that's a good analogy. But anyways, so what I was going on here, going to Hope's comment, When using the daily, one really cool thing is you use the high and the low. As you can see, I have a limit order here, which I placed via my phone, by the way. What was I thinking? First of all, I didn't get executed. I didn't get filled. Well, I didn't get filled because I didn't get executed because I didn't get my price. So what was going on in the wane, the internal wane, right? I was thinking something like this. Crazy? No. To put this in perspective, since I placed that trade, this went up 20 pips, which I think is nothing compared to overnight price action typically. So already volume and volatility is collapsing. So imagine the VIX coming down hard. Okay, imagine the VIX going from 20 to 15 to 10. Okay, VIX should be about 8 in my opinion, but we're getting there. The other strategy I could have done, because I was looking at this like a Fibonacci retracement and all that kind of stuff, okay? The other strategy that you can do as a day trader is say, you could kick it off the bottom or play a fib, okay? So there's a bunch of things that I teach in the day trading course, things like the Asian fade and all that kind of stuff. But one of the things I thought we could do is over the summer, pay closer attention to these smaller inside trends, if you will. Okay. And that's what I'm going to do today in the swing trading group. Today at 2 p.m., my live group and my swing trading group are meeting, and I thought I'd cover some of that. Okay. Okay. Anyways, I hope to see you guys there. La la la. All right, so the stock market's opening any second now. Ding, 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 ding. So what do you want to do? What do you want to do, huh? What do you want to do? We got an inverse, how you say in English. I'm going to highlight that because I don't want to ignore it. But we have a fib war going on too. This is a bearish 618. Okay. So the market's going to open, and since I'm a bull, I want this to go up. So I'm still playing yesterday's range, basically. You see that? I want this to go up, so I'm looking to be buying at support. I'm not sure on Basel III rule changes. So just that doesn't typically happen, right? So I don't know the effect of that. Okay, and that's the honest answer. So you can start picking lines here. Are you a bull or a bear? Okay, about 2 minutes, 2.5 minutes to the open of the stock market. Okay. So if you're doing price action or using price action, okay, you're looking at role reversals here. Okay. So that would be sort of a sweet spot. This is also a buy down here, but much less preferred. Okay. What you're playing here is an increase in volume and volatility because of time of day. So I'll show you how the auto stop works. Let's say I wanted to scalp this. Okay. What I have set here is when I pull the trigger, so let's say I click buy, it's going to put a stop 15 pips below me and 15 pips above me. Okay. Okay. Right now we're kind of lacking trend. Like you can see, this is a bunch of mediocrity. This is us sort of like, again, this is a daily bottom. This is a daily top. And now we're inside of that almost. I almost have this like a triangle, right? This is really showing you that nobody's trading. So it's probably not a good time to do scalping analysis. Okay. But I want to show you the OCO. Okay. So watch this. You ready? If I click buy, oh crap, a full standard lot. Hang on, I didn't mean to do that. Oh, stupid. I had to reinstall the platform. Man, oh man, that's not good for me. But what I wanted to show you is, you see how the stop and the limit has already been placed? Okay. Okay, you see that? The stop and the limit was placed automatically. All I did was click buy. Yeah, it's in the day trading. I think day 3, I think it's, right? It's right underneath the video. It says download bonus tools or something. Okay. I'm using something called auto stop. So this is an OCO. So again, straight out of the day trading course, guys. Okay. The screen is blacked out? Yeah. Sure why. Okay. Stock market is now open. Volume and volatility should be increasing, at least on the short run. Maybe we can throw down volume here. Okay. So now it's a 1-minute chart. Isn't that interesting? Exactly on the minute. Boom. Welcome. Volume and volatility. Right on, Ken. Kennedy. Holiday in Cambodia where people dress in black. Wait, that's Black Flag. That's not Dead Kennedys. Oh, it is Dead Kennedys. Okay. So that's one way to scalp, because the cool thing is it's like a binary option, if you will. Okay. Where your risk is predefined. And to me, my rule would be you can only move the stop closer. You can't move it farther away. So unfortunately, I did a full standard lot. Didn't mean to do that on this account. But so the worst I could lose is $150. Okay. Now, the other side is it's automatically put a limit here, which means currently I'm expecting to make $150 if this works out. And what that tells me is I have a risk reward ratio of 1-to-1. So I can't move this down, but I do give myself permission to move this up if warranted. Okay. Okay. What do you guys think? Okay. Now, we're this time of year, there's not a lot of volume and volatility. You can see there's been almost nothing new coming in here, even at the stock market open. So don't expect much. But here's the cool thing. Have you ever found that if you stare at a trade, it doesn't perform well? You ever notice that? If you have your risk reward ratio set, you can just walk away now and say, like, come back in an hour. Is it still open? Okay. Yeah, now Kevin's talking about a day trade. This is like a market open scalp, right? This works particularly well on gold, for example. Right? And I've taught you guys how to trade gold many times. There's 1 hour a day I trade gold. Okay. In fact, we could go take a look at that. Let's go back to gold. Gold. Unless I have an XAU up here. Do I have a full-on XAU? No. All right. So let's just do this. All right. Let's change the way we're looking at things. Okay. So typically, trying to get the right hour here. Okay. Typically, with trading gold, I think it's about here. Because it's later now, right? It's 9:30. So there's 9, 8, 7. Yeah. Okay. So what I've taught you guys in the past is that, okay, this, okay, and it, right, it might actually have been down here. Okay. So I suppose it depends on if you're a bull or a bear. It's 7 a.m. is what I'm trying to get to in English, to say it in English, right? 7 a.m. is a key moment in time to be trading. Okay? And typically what I'm trying to do is get my trade in and then walk away. And when it works out, I find by 9 a.m., which is now, I pick up as much as 70% of the average daily range. So it doesn't sound like a lot, does it? But imagine this. You could trade for 24 hours a day and get, let's say, 100 pips worth of profit, whatever, on gold, right? Versus trade an hour and a half to 2 hours and get 70 pips, right? Are the other 22 hours worth the 30 pips? So it comes down to like knowing when to trade. Okay. So one way to look at it is, maybe you were a buyer in here or stuff like that. It comes down to whether you're a bull or a bear. Like a bear might have said, okay, hard open into a sell zone. Okay. A bull might have been a buyer here or a buyer here. But the issue is typically it's in this hour that you're playing the game. Let's say it yet another way. You live in California, or you live in New York, or you live in Iowa, whatever the case may be, and you're sleeping during this period, but you wake up and you roll over to your computer right here and you say, now you're interested in maybe playing gold. You're either interested in selling it high or you're interested in buying it low. And you only have this 2-hour period, this window per day. And that trading window looks like, that trading window looks like this. It's somewhere in this time frame, right? So a bear is looking for resistance, a bull is looking for support. They both have entered trades here. I don't know which one's going to make money. They don't know which one's going to make money. And if you're using the OCO like I just showed you, you can now walk away and be done. Go to your day job. Okay? That kind of stuff. Okay? Because many of you do not want to be a day trader. Is there anyone here that does not want to trade 6 to 10 hours a day? Or is there anyone here that just does not want to do that? Okay? By the way, being a trader is a pretty kick-ass job. Okay? But some people just don't want to trade that way, which is fine too. So you got to start learning how to do that and say, you know, you're making your choice. And that's your choice for today. When Marina says we don't want that as day traders, well, I'm just talking from my own experience, Marina. I used to do that and I loved it. I don't do it now, but I used to. Okay, 10 o'clock at night to 10 o'clock in the morning. I loved it. And very often I'd go like 2 days sitting at my desk. Okay, so I'm not like trying to make a point of it, Marina, right? But I'm saying that if you don't, then you have to sort of change the psychology of how you make decisions. And sometimes you have to make a decision and say, all right, I've made a decision today on gold. I'm going to either lose this much, right? Here's your entry, here's your stop, let's say. I'm not even looking at the price, I'm just giving an example. And that your limit is going to be this distance times 3, let's say. Or times 2, whatever your risk reward ratio is, right? And be done with it. And that maybe staring at it is just maybe a luxury you don't actually have, but you make the choice. You know what time of day to be at your chart. You make your choice, you drop your stop, and you take a walk. And you don't stare at it. Okay? And remember, if your risk reward ratio is correct, let's say for every 1 pip you risk, you try to get 3 to win. If you lose 66% of the time, and 33% of the time you win, how much money did you lose? Zero. But for many people here, that's a hell of an improvement, right? You're like, oh man, I made 660 losing trades this year. But I got 330 wins this year. And I'm very disappointed because I didn't lose any money. So here's the thing. Okay, and it's a psychological part here. Can you get this to 50%? Can you get this to 50-50? Could you strive over the next 12 months to get to half your trades are winners and half your trades are losers? And that would have to be learning some seasonality, learning some fundamental bias, learning the higher time frames, learning the smaller time frames, and setting things up, and know when to take the shot, know when to not take the shot, and just sort of overall make better trading decisions with the goal of not being perfect. I really don't like that idea. When you're developing things like discipline, you have to be perfect 100% of the time. Okay, I get that. But as trading analysis is concerned, like as a trader, you have to be perfect. You have to try, right? But you can't influence the market. So like, let's say you focus on every trade you make is a perfect trade based on the analysis of you made. You're really working on that. Your fundamental bias, your technical analysis, your price action, your pivot points, your seasonality, all this kind of stuff. And when you pull the trigger, you're very certain you're going to make money. And even then, can you get to 500 losers and 500 winners at the end of 1 year? Here's the thing. That's a profitable year. And that's what I'm trying to get you guys towards. I don't want you to have to make 3,000 winners and 500 losers to be reasonably profitable. I'd rather, because what that means is every individual trade wasn't that really good of a trade. Yeah, they were profitable, but nobody cares about pissy little barely profitable skippy scalps, right? I analyzed someone's trading history the other day, and he had something like the last 20 of his trades were essentially profitable, but they were all like 12 pip trades. And I'm like, oh, it's one of these idiots, right? No one cares if you make 44 trades in a row with 12 or 8 or 3 or 9 pips or whatever. Like, I think they were even less than that. And I realized right away this person doesn't know anything about trading or investing. They might be pretty good at technical analysis, though, but they're jamming their stops and getting knocked out at plus 5 over and over and over again. So what it tells me is his average win. Like, would you invest with this guy? His average win is 12.6 pips. But his average loss is 89 pips. And that's essentially what the stats is. And he's like, well, I got 44 winners in a row for a total of $328, $283, right? And then I have this loss for 138. And then you start adding things up, and you're like, dude, this could go. You could have one bad day where you get 4 bad trades and it wipes out your month. And I'm like, dude, not interested. Okay? So I'm trying to get you guys squared away where, wouldn't it be great if your goal for the next 12 months is to make at least 1,000 trades, and every trade is you're trying to make good trades, not perfect trades. They don't all have to be winners. But wouldn't it be great if you knew if 66% of them were losses, you would still have 100% available equity in your account? And over the period of time, if you could get this just to 50%, which is a small, reasonable goal, right? You'll probably have 125% after a year of doing that. And then another year goes by, guess what? 66% are winners. Okay, you see that? Could you go from 66% losers to 50% losers to 33% losers over the course of 3 years? Is that achievable in your opinion? Doing at least 1,000 trades a year? At least 1,000 trades a year. Okay. JKM says there are scalpers that make a good living. Yeah. Okay, that's fine. I'm not going to challenge that. But what I'll tell you is an institutional investor is going to look at risk-adjusted performance, JKM, and will not invest into that. Okay? That's all. But can you do it? Okay, yeah. It's going to require some time, and your lot size is going to have to be, larger. Okay? But in my opinion, based on my experience, my analysis of really hundreds of traders, I've analyzed millions of trades. Okay, so I got my experience, having seen millions of trades, having spoken to all kinds of investors. Okay, and then my formal education in financial management. It's not the best trading strategy if you're going to try to attract investors. That's all. Okay. Morena says, I would never be able to handle 1,000 trades. Really? How many trades do you make a day, Morena? Right? Like, for example, Morena, 5 trades a day times 20 days a month, okay, is 100 trades per month, times 12 is 1,200, right? So that's not a lot of trades. No, okay, that's interesting, Morena. If I was working with you or you were working with me one way or the other, I would try to work with you in a way that we could increase that without really adjusting too much of what you're doing. Okay? You see what I mean? Like, statistically, let's say, one mistake and you've lost 100%, right? Let's say that one trade per day, or, like it always used to be like, Trump would send a tweet, and before that it was George Bush would have a press conference, and as soon as he spoke, the market would crash. Like, you don't want to get in a situation where, you get knocked out of that one trade and you lost the day, right? So I know, like, if I was working with you, one of the things I think, like, I don't know, I'd have to see what you're doing and work with you and get to know your style and process better. But I think what I would do, Morena, is I'd say, whatever your lot size is, I'm going to cut that dramatically, right? So if you're trading one mini lot, we're going to do 10 micro lots. If you're doing one standard lot, we're going to do 10 mini lots. So it's the same amount of money, right? But what I would do is I would say, all right, let's take the basis of how you're setting up these trades and maybe utilize things like correlation, right? And try to get you to make 10 trades in a day, adding up to the same amount of risk, because each one is 1/10 of the other one. But see if we can spread the risk over the 10 trades, right? And see if we can get the same return, but see every single trade is likely to have less risk associated with it per trade, right? And it could be interesting because we might be able to get you to have the same amount of return, but half as much risk when you look at it, sort of post-analysis. We know entering it's the same amount, but actually depending on your, sort of percentage wins, let's say, that might add up to lower volatility because there's less likelihood to be knocked out of a half decent trade. You see what I mean? And that does happen. It happens to me. I don't know if it happens to you, but it happens to me from time to time. In fact, more often than I'd like. But here's the thing. If you only have the one trade, it takes you out of the trade. No, you didn't lose a lot of money, but it gets marked down as, a drawdown, even if it's only 33 pips or 50 pips or whatever the number is. But it's impacting things like Sharpe ratios. And if in those moments, instead of taking the one loss, which profitability-wise is probably not that big of a deal, but if, let's say, on those unlucky days, 5 of your trades get knocked out for the loss, and the other 5 stay open because they somehow survived the volatility, because of the correlation was there, but the sensitivity to the event is different, based on like relative strength or something. And those not only do not get closed for a loss, instead they stay open and actually hit target, might take an extra day, but they get recorded as a win. Now we're looking at, instead of the one big drawdown, you have half as a drawdown and half as a winner, and nothing happened. But when it does things like how it's reflected in your Sharpe ratio is dramatically different. And what the Sharpe ratio will tell you is, by me coming in and saying, okay, let's just bet on more horses, but based on the same logic, the Sharpe ratio will just say, this is better trading. Yeah, Marina. And for me, it's London, or it's Asia, right? So that's all. So what I'm saying is, instead of betting on one horse, let's bet on more than one horse. And you're more likely to have a horse cross the finish line first. Okay? That kind of thing. But the same amount is gambled, if you want to look at it that way. So that's how I because I know you're a good trader, right? And I know you're an experienced trader. So that's what I would like to, then I would say, well, how can we get you to trade more? Because you're spreading the risk over more, you're lowering the volatility of your trading history, and you're getting better performance results. And this is one of the things that, so I started my Oxford program yesterday, and by the way, I can tell it's better than the MIT one already. And the reading is great. I think I'm going to enjoy it. And I know we're going to cover this in a few weeks at the Oxford program, because the issue is, if I'm analyzing how a computer is using, let's say, like behavioral finance and machine learning to come up with statistical models on how to trade financial markets, as a manager of the portfolio, how do I analyze the results, the performance results of the trading strategy? And it's the same thing though, right? Like if I'm analyzing your trading history, Marina, or the one of a computer algo, I'm still looking at it and say, okay, what's the return? Right? So JKM says, hey, well, scalping can be profitable. Okay, that's great. That's fine. Same thing with the algo, and same thing with Marina, right? So now I have to decide as an investor, which one has the best performance. Okay. Do I go with the algo? Well, let's analyze the algo. Do I go with the scalping? Hey, let's analyze that. Do I go with Morena? Let's look at that. They might all be profitable, right? So there's this idea of a frontier. I don't remember what it's called, but let's do oops, I don't know how to draw this. Okay, I think it looks like something like this. Let me make this a little bigger. I think it looks like this. Hang on. Okay. Gee whiz, this is terrible. Hang on. I guess I'll do it like this. Okay, let's draw. Gee whiz. Okay. No. Oh, I have to unlock that. Buy now. Okay, I have to unlock it. I already did buy it. All right, let me just try. Let me try. Okay, I'm trying to draw a chart. Now, Okay. All right. Okay. So what it looks like is this. I think I haven't covered this yet in my course. So here's my uneducated opinion about how I'm going to be educated. Okay. I'm going to look at 100 different traders or trading platform, traders. Okay, somewhere on here is the scalper. Somewhere on here is Morena. Somewhere there's a hedge fund with an algo. Okay, and the thing is, as a potential investor now, okay, I'm looking at something like risk. I want to take a certain amount of risk, and I expect some sort of reward, right? And somewhere on here is a magic number. Okay, a magic number where there's a perfect, there's a perfect strategy out there for me, personally, based on either the risk I'm willing to take or the reward I'm trying to make. Okay. And you'll see that there's a relationship. Okay. So if I want lower risk, I'm going to look for a trading strategy with this type of, with that reward. Okay. You see that? Lower risk will produce lower reward. Higher risk will produce higher reward. These outliers are underperforming based on, on how much reward they're making or for how much risk they're taking. Okay? I might have this backwards though, right? It might be reward here and risk down here. But anyways, I want you to think about that. Okay? And so the scalper comes along and says, I'm profitable. And I'll say, okay, that's really good. It doesn't mean I'm interested in investing. I look at it and say, well, you're producing profits. I'm glad for that. But there's too much risk tolerance for what I want to achieve. Yeah, it is, right? I got it backwards, don't I? Sorry, I haven't been educated yet. This is what they're going to teach me. Sorry about that. Yeah, I think this is risk and reward. Okay, so for this, for this amount of reward, you've taken too much risk. So I'm like, okay, you're profitable as a scalper. I have no problem with that, but based on my personal preference, you understand? I'm not saying good or bad. I'm saying based on my personal preference, you're taking on a lot of risk, and I could just maybe I don't make the same amount of money, but I might be able to make 80% as much money that you're making, but for half as much risk, which means if there's a chance that you have a bad year next year, it's much less likely that I have a bad year next year. So you're right. So because of your risk is a function of, your reward is a function of risk, and you have more risk, you could have a bad year next year and I might just do fine. Now, you might also do better than me next year, but I will do fine as well. Okay. So I'm looking at this like, I think this is where we're going in my algorithmic trading program at Oxford is, how do you teach a computer, but also then how do you know the computer is performing well? But what does that even mean? What do you mean performing well? Well, what kind of return is it producing for the risk, and can I optimize this somehow? And what ultimately what you're trying to do as an investor now. So I don't know if you ever think like an investor, but you're trying to find somebody on this curve, right? So what I'm trying to do is I'm looking for like a couple of things, right? Like, let's get here. Not interested, suboptimal. Okay. Suboptimal. And then I might say, well, Okay. That looks pretty cool, but this might also look good. So then it comes down to, again, if those are optimal performances, you know, what is my high time frame? What am I trying to achieve? Do I really need that much reward for that kind of risk? Do I really need that kind of risk? So then maybe as a board or an investment committee, we decide, you know what, we're going to invest into this team. Okay. Tim's killing it, and he says it's all thanks to me. Awesome. I love that. Keep telling me more. Tell me again why I'm awesome. Right? Love it. Dan says that then it's about risk reversion. I think you might be, about the expected risk, the expected return over risk. Well, there's many different things, right? So I'm wondering if if the course is going to cover like multiple forms of Sharpe ratios and stuff like that. Okay, but you see where I'm getting at, guys? When I say things like, oh, you know, maybe you want to swing trade and not day trade or scalp, I'm not saying anything bad about scalping or day trading because I've done all of that too. Okay, and of course I can float back and forth. It's more of the issue of, you know, where on the frontier, which is that line, are we falling? Okay. Yeah, Marina, that's awesome. Like, it'd be great. Like, you know, if anyways, try it, or at least on a demo account, right? Like, and I know you already agree with me, but let me say it differently one more time, and maybe it's helpful to others. If you made one trade a year, and I've met a professional trader that does that, okay? If you made one trade a year, what do you need to do so that that's not a bet? How is that not gambling? Well, you better do some research, right? You better have conviction for your fundamental bias. And also, if it's 2 trades a year, so you buy every March, right? And you buy every August. Is that less of a gamble? And why? So if, let's say, you argue 2 trades per year is less gambling than 1 trade, because now it's not 50-50. I mean, each one's 50-50, but if you're betting on a trend, maybe it's not 50-50. Maybe your risk drops per trade because of that. And then maybe 3 is less risk than 2, and 2 is less risk than 1. Then how about 1,000,000 trades per year? What's the risk per trade? If you're making 500 trades a day, 5,000 trades a day. Okay. So you want to find on your own personal frontier, right? If 1 trade here and 1,000,000 trades here, okay. How, if you're looking at it per trade, how can you lower the risk per trade? And that might be a way to do it. You know, the discussion with Morena. Cool. Because, you know, guys, you get to a point, and Morena's probably there, where you're good. You're good. You're a good trader. You're fine. Everything's good. But you need to improve ultimately. And there's different things you want to focus on. There's a lot of different things I remember going through. How do I do better per trade? How do I get a better absolute return? Like, how do I make more money next year? But also, I started asking, how can I do this with less time in front of the charts? Because I swear to you, it used to be 10 o'clock in the morning to 10 o'clock at night. No, sorry, 10 o'clock at night to 10 o'clock in the morning. But then there were very often things I was doing on top of that. So it was actually more than that. So I'd catch, I'd sort of end closer to the London close, which is actually, it was California time. So yeah, so I'd leave at the London close, but then I'd come back in Asia a little bit and try to get some trades in and all that kind of stuff. Then sometimes there were news events and all of a sudden it was sometimes more than that. And then certain times of the year, I would go 2 or 3 days without leaving my desk. Okay? Because I was so focused. And I was so focused on the 5 and the 15 and the 1. I used to trade the 1 minute chart, the 2 minute chart, the 3 minute chart, the 5 minute chart, the 15. And I would almost never go away from the 15 because I already knew what I wanted to do on the other time frames. You have to understand that. I already made a decision. So by the time I sat down, 15 and 3, for example, 3 minute. And I'd be on that for days. Okay? And so ultimately, after you do this for a while, then the next challenge is if you're already good, how do you become great? And that's not an easy question either. Okay? Look at Digi's joke. Yeah, it sounds stupid. Hey, Digi, what kind of buffoon would even believe that, right? It's amazing. Hey, Digi. Digi, have you ever come across an idiot that was spamming you that way? I mean, it's inconceivable, huh? Like, what's going through a mind of a person like that? Right? Obviously desperate or, right? Yeah, just like Mariana said, obviously desperate. I don't think delusional, though. Like, purposely a liar would do anything, right? To take from those that have earned. I mean, it's amazing, right? Did you? So yeah, it's sad for that kind of person, but I don't have empathy. So anyways, have you ever met somebody like that? Did you? Feel sad for them, huh? You're like, wow. If they only knew how to create value, then they would have their riches. Remember, guys, the most successful people are ones that have created more value for people than they've received. So if you want to become a millionaire, produce $5 million worth of value for other people. That's the secret to life. That's what I would focus on. If you want to have $1 million, find a way to produce 5 million in value, and you'll get it. People will be happy to, right? Simple. All right. All right. And by the way, if you want to get rich quick, produce $5 million in value quickly. Remember, for other people. You're like, but Wayne, that's difficult. I know, right? It's only difficult in the beginning too, by the way. It's funny how when you meet people with money, it's funny because $1 million is not a lot of money. It's so easy for them. But they have so many assets that they're valuable, and the value that they're creating is quite large. So like $1 million is nothing for a lot of people. Now for 6 billion people on earth, you can't even fathom $1 million. But there, for the others, $1 million is like nothing, right? It's something you do a few times a month, right? Your friend comes up and says, "Hey man, I need some help on a deal. Can you throw down on this?" And you're like, "Yeah, well, I guess so." And boom, you made $1 million because you helped a buddy out and it was nothing, no big deal. Okay, yeah, okay. And it's just, it's strange, right? It's strange. I know people that make millions of dollars on just deals. They're like, "Oh yeah, I got this going on. I got that going on. This happened, that happened. Yeah, it was great. Got 5 on this one, 3 on that one." Okay. But the thing is, they're at that point where they are able to create that level of value. Okay. And other people would look at that with jealousy and say, "Oh, it's so easy for them." Well, it's easy for them because they're doing $50 million deals because they have that kind of asset. And they know those kinds of people that have those assets too. And they're just doing the same thing that you're doing, just on a bigger number scale. So if you make a trade in Forex and you make $1,000, it feels all right. And for someone else that makes $1 million, it feels all right. But it's just what you do. Is that right, Raymond? You guys are doing lockdown again? Are they going to stop selling alcohol and cigarettes? So yesterday was my first day of vacation. No wife, no kids, just me and the dog and the rat. And I'm like, you know what? I should smoke less and drink less wine. So I sat out on the deck and I ordered a steak from Outback. I got myself a huge ribeye, and I got with shrimp and lobster and a giant salad. And I'm like, you know what would go well with this? Some red wine. So I'm like, well, you have to with this meal like this. So then I had a couple of glasses of red wine and my belly's full. And I'm like, oh my God, you know what'd go really well right now? Yeah, a nice cigar. But like, what would I do if I was in South Africa? Yeah, well, luckily I got 200 bottles of wine in the cellar, and a 6-foot tall humidor full of hundreds of cigars. Yeah, okay, so I could get through shutdown number 4. Man, you gotta get your prepper stash going, right? That's what mine looks like, Raymond. As long as I got fabulous wine and fabulous cigars, we'll get through this together. But that means, Raymond, you got nothing else to do but Forex. Yeah, Cape Town, Raymond. Morenas is very stupid and incompetence. I think you're talking about the government of South Africa. It is a true risk. It's a true risk when investing into emerging markets. And that's why the compensation has to be there, right? Raymond's like, yep, love that. You know, it's really actually funny because to get into the cellar, you have to do a thumbprint scan. So it's got biometrics scanner on it. So there's no key to the door or anything, right? But here's the thing. If you open the door and walk into the cellar, there's a camera behind you. Not behind you when you're facing the door. When you enter, it's like sort of, sort of so you don't see it is what I'm trying to say. So you open the door and you walk into and now all the wine is there and the cigars and all the whiskeys are there. Click, takes a picture and sends it to my phone. Yeah, that's what you got to do when you got kids, right? So it's really funny. I'm like, oh, somebody opened up the cabinet door. Oh, right. Oh, someone's opened the cellar door and there's the picture. Which means I have lots of pictures in the back of my head, and that's why I'm getting a haircut tomorrow. So South Africa be shut down, plausibly incompetence and all that kind of stuff. Okay, well, that's not good for the South African economy. Are they still going to pay me a high interest rate? Yeah. So the next thing, and I guess I should kind of talk about this. Nuno says my treasure. It's not my treasure. Well, some of it actually is because now it's so old I can't ever drink it. So it's weird. You got to find a time when to drink it, but it's not necessarily my treasure. It's like I prefer to drink it and drink my wine and smoke my cigars. But I had a guest over, and she, we made a nice meal before she left. And anyway, so I pull out a nice special bottle of wine, and she's like, "Oh, I can't have much. I get headaches from red wine." I'm like, no, this is special. And I told her all about it. And it was the wine I was telling you guys about a few weeks ago from very, very, very old vines planted in the 1940s in the Rhone River Valley of southern France. And this vintner is saving all the old vines. See, typically what'll happen is these vines don't produce very many grapes. They're too old. Now, the grapes they produce are fantastic, but they don't produce many grapes. So what a vintner wants to do is maximize their yield. So they just rip out these old vines. But the wine is better than the young vines. Yeah, but they're in the business of putting grape juice into bottles. They gotta make money, right? So this guy's he's going in and he's saving these old vines. And so I'm like, oh, this is better. So anyway, so I poured the wine for her, and she loved it, didn't give her a headache, so she drank more. Everything was great. And the next day she felt great, and she's like, I want to get that wine. It's the only red wine I can drink that doesn't make me sick the next day. I'm like, oh, yeah, well, there's a problem. And she's like, what? Yeah, well, you can't buy it. It's not available in stores. And then we try to get more of it from the vintner, and it's all sold out. And I'm like, so maybe that is treasure, but at least I drink that treasure. Okay, let's see. Not good for easily. Yeah. Yeah, so the shutdown is not good. So yeah. So I have to pay attention to that. So thank you for the heads up. I'm just wondering how much of this flow is truly for South Africa and versus sort of a normalization. So I think about this like the Bank of England today. I summed it up this way. The Bank of England said, not until the Fed moves. Okay? And the Fed's not going to move for a while. We've discussed this, and I don't need to discuss it more. Maybe we'll end up talking more about it today in the swing trading group. But I kind of look at this upward move against the ZAR having to do with, will South Africa have to pay more for its U.S. denominated debt? That's what it comes down to. And do you guys see the 10-year T-note? Before the Fed meeting, it was 1.6. And I mean like a month, okay? A month before the Fed meeting, it was 1.6%. And then going into like I think it was the day before, it was 1.5%. And if this dollar strength move or czar weakness move is truly related to the Fed policy and the hawkish Fed, like, what do you mean hawkish Fed? If they're hawkish, they would taper now. But this is what the media is telling us. The hawkish Fed, what hawkish Fed? There's no hawkish Fed. But anyways, if this is truly going up, what would the 10-year T-note be? And it would be above 1.6, in my opinion. It would be interest rates going up. Okay? It's not even going to give me a yield. Come on. It's a nice website, though, actually. Am I missing it? It's giving the price, not yield. But I typed in yield, for crying out loud. $10-year, 10. Oh, maybe that's what I'm doing. Quicken Loans. When are these things? Oh, they're all ads. It's the same thing, right? Anyways, 1.482. 1.482. Okay? 1.482. Is this a dramatic change? Okay. I want to show you this way. Let's say 3 months. Okay. Are interest rates going up? This is April. This is now. Are interest rates going up? I'm not talking about the Fed funds rate. Nobody trades the Fed funds rate except banks lending money to banks in the Fed funds market. I'm talking about our interest on a loan. And we're going to substitute that because we don't know the terms of a loan, but we know they're highly tied to things like the 10-year Treasury. Interest rates have gone down. Well, what's this nonsense you're hearing on the TV about it's the end of the world? You need to stop buying the stock market because interest rates are skyrocketing and it's out of control. It's the end of the world, guys. It's all over. The market's going to crash. It's going to be you, Santa Claus, and Grandpa Joe Biden locked in the basement. Look, they're actually getting cheaper. It's actually cheaper. Look what happened, right, more recently. It spiked on the news. Look, watch this. The 10th, 11th, 14th, 15th, 16th. What happened June 16th, guys? What happened June 16th? Yeah, the Fed meeting. No, not the discount rate. That's a different rate. But anyways. But that's when you were told to panic, wasn't it? Isn't that the big panic? Isn't that where they said the sky's falling, cats are going to live with dogs? and the stock market's going to crash. Dude, the stock market's up. Interest rates have fallen significantly from 1.6 to 1.5. So, having thought rationally, I've been trying to tell you, I'm still a dollar bear, guys. Even in the mass hysteria, as Mr. Kennedy said. I got together with my live group last Thursday and I said, essentially, calm down. Nothing has changed. We analyzed this market a week ago. We're back here 1 week later. Nothing has changed. The euro dollar dropped 200 pips. Who cares? But you have to focus on what you want to do and still do it. So last week, I got together with my team, and the only thing we talked about for, 2 hours was staying calm and staying focused. And the market, like euro dollar, has been up every single day since that meeting. How many people attended that meeting? Grind is basically saying Blue Horseshoe loves Caldecott steel. Okay? See? That's what you need. That is what you need. The focus on reality. Was it Anecdotes steel? Thank you. Anecdotes steel. Blue Horseshoe loves Anecdotes steel. So cool. Cool. So I'm looking at this and, the first part of this story is not up. Okay? Not up doesn't mean down, but not up means not up, which is fine. Okay? So if there's another wave to the upside, it would be South African rand weakness, maybe because of the closure. But again, I'm thinking out loud, how much is it really the rest of the world investing money into the good people of South Africa versus just yield hogs trying to pick up a high yield? You see? In that case, nothing's changed. But we'll see. I got to keep an eye on that, and thank you. That's why you have to have a team, by the way, specialists. We have specialists all over the world. Cool. Peso. Gotta love the peso, man. Gotta love our wonderful, beautiful peso. Okay, that's the recovery from mass hysteria. Yeah, Mr. Kennedy says South Africa is a political mess, but that's the thing. I guess that's the point I'm making. Like, when was it not a political mess? 1810? 1753, South Africa was politically stable. I mean, look, like, right, Moreno, like you might have to wonder who in politics knows how to be politically stable. Is it even possible? I don't know, right? Oh, look at that. I missed the entry or the exit. Oh, look at that. I missed the exit just by a tiny stair. Oh, I should have got out. Anyways. So I think it's all been said. I guess one more time, the Bank of England came out dovish. So the Great British Pound, at least on the short run, is overbought. Okay, that's a relative strength issue. This is not a macroeconomic issue. What that means in English is that somebody bought the pound, I don't know, let's just say here. I mean, I think they did it a long time ago. Let's go out here. All right, those that bought the pound down in here. Okay, they were thinking, and maybe even more sort of in this period, they were thinking that the Bank of England was hawkish, meaning that there's concerns about inflation and that they have to end all emergency measures and in fact raise interest rates. Well, when that happens to a non-reserve currency, the value goes up. What did we learn today? Bull-larky. That ain't going to happen. So now you have to adjust your fundamental outlook for the Bank of England. Okay? So back down here, you're like, well, people are thinking about interest rates going up, so on and so forth. As the market reopens and inflation is kicking in and the Bank of England is going to have to do something, and they just told you, no, probably not. Okay? So now you have to make your own decision on how you want to play this. Okay? Okay? Does that make sense? Yeah, Charlie, I don't want to lose. I don't. Yeah, I'm a little bummed on that. I actually popped a full lot on that. Sucks. Share my ideas for Kitty Cat. Okay. Okay. The most obvious, happiest sell ever. Look at that. Thank you. Thank you. Awesome. So awesome. What wonderful rewards. Okay. So now what? Okay. Now what do you want to do? I would do that if I got the opportunity. I would do that if I got the opportunity. Okay. Right now, okay, you have to start. I have it over here now. You have to start kind of identifying your zones. Okay. On a 4 hour, that's a 50%. What? Oh, look at that. I haven't done Fibonacci in a while. Yellow. What a great idea. Thank you, programmers. Let's make Fibonacci yellow. Cool. Okay. Boom. Raymond, my computer, well, it didn't blow up, but I had to reformat my hard disk. So it's a brand new platform, and that was the default. I forgot about it. I thought I changed it, but apparently it changed back. So fat finger, I suppose, right? So CAD will get strong. Why? I never said that. I could come up with a comment that's convincing, but when did I ever say the CAD was going to get strong? If I didn't say the CAD was getting strong, what did I just say then? Yeah, a weak US dollar. Cool. So I got to go because, well, I'm going to see many of you at the Swing Trading Group meeting at 2 p.m. Eastern Time today. If you want to become a part of that community, you need to take all the video training courses at fxbootcamp.com. And in that process, you'll be invited to join for $99 a month. Sometimes we're setting up trades for 100 to 300 pips at a time or greater. Sometimes it's just group therapy. Sometimes we're doing fundamental analysis for 3 hours. Sometimes it's group work, and you're working with other traders on developing technical trade plans. And we do some other things, but I'm not going to tell you. It's a super secret. So if you like that, get on board, fxbootcamp.com. If you need a broker, tradersway.com. If you need my trading tools, that's metatraders.com. If you want to read my book, that's at amazon.com. That kind of stuff. Coolio. Well, I got to go do some algorithmic trading. Keep the Brits at Oxford happy. So, peace on earth. May the pips be with you. May your profits be above average. I hope to see you at 2 p.m. today in the live trading group. And if I don't, then I'll see everybody tomorrow at Forex.Today. Cheers.